a better number, confirming the deliveries, a beat on the bottom and top line, importantly on the bottom line, where they can go into the S&P if that's voted on.
This is a jaw dropper in terms of the level of profits. I think it just shows the trajectory now. You know, this really puts massive fuel in the tank of the bulls. And this is really an Aaron Judge-like home run quarter combined with the deliveries. This is a Teflon-like story. It's all about China. I think that's what's $400 a share. And I think now $2,000 bull case now could get hit, given what we're seeing on the bottom line. And it looks like S&P 500 as a new member.
Ed Lee, what stands out for you on this, and what will you be looking out for on the earnings call?
I mean, I'm looking for, I think, to really hit their 500,000 target for the year. They say that they are. All indications are they're going to. I mean, it's a much more mature company. It's much more disciplined. They're hitting their targets or they're exceeding their targets. They're profitable. They're probably going to be in the S&P 500. So there's going to be more investors in it. I'm going to be a little kind of counterintuitive here. I mean, a big part of the promise is sort of Tesla being more than just a car company. Everything it's shown now is that it is just a regular car company. I mean, where is the self-driving? Where is, we need more charging stations, period. We're going to see something more about the battery factory, of course. But, in general, I have yet to see, I mean, there was this narrative around it being sort of the far future. It's the near future now, right? So the closer they get to being a regular car company, in a weird way, the less interesting they are.
I mean, positive free cash flow. Dan, where is the big profit surprise coming from?
Well, I think it's coming from two areas. One, China. I think profitability on those cars are 10 to 15% higher than in the U.S. and Europe, and they've cut some significant costs. And I think that's really the big difference. That's the fundamental driver here, because it's not just about the deliveries. It's what you're seeing from a profitability perspective. How quickly could they get to $20, $25 of earnings power? That's the question. But this was, for a bull, I mean, this was sort of a best case in terms of what we saw on the profit side.
Mike Santoli, what's the bull case for this stock over the next 12 months?
Well, over the next 12 months, to be honest with you, I don't think you have a bull case if you're only looking at the next 12 months, because the stock has quadrupled this year while the deliveries for this year are static. Right? They haven't said they're going to massively deliver more cars this year than we thought they were going to 7 months ago. It's much more about the larger future and the market share ultimately that EVs and Tesla's cars specifically can get. And then, of course, the longer term story has to be autonomous driving and the software push that basically could transform the economics of this business. It really is, at a price of $1,600 a share, about that distant future. In my opinion, 500,000 vehicles, what they're talking about this year. Way back a few years ago, that was supposed to be 2018's total. They pushed it off to 2020. They're going to do 2020. So they're delivering on it. As I mentioned earlier, people are focusing on the fact that they sold these regulatory credits and they have reduced expenses. The question is, are they reducing just the investment in the business as opposed to just operating stuff? So not to sort of, drag on the company and its performance here, but it has to be viewed in the context of a stock that's just gotten completely unhinged to the upside in the short term.
The release mentions the higher regulatory credit revenue as one of the factors driving it. Dan, how do we think about that in terms of the contribution and what that is?
Yeah, that's definitely a tailwind. They have a few tailwinds, and that's going to be something that they're seeing from a credit perspective. They also have some benefits overseas, and that's something that's going to be on the call. But as Mike and Ed talked about, I do think the key here is 450,000 now, I think, looks in the cards potentially for deliveries. Comes down to that profitability trajectory. Is this one time, or what does it look like going forward? If it's a trajectory, then this is sort of what I view as a paradigm changer in the Tesla story.
Dan and Ed, we'll have to leave it there. Thank you both very much.